Welcome to another episode. Today, you guys, we are talking about accounting method options for cryptocurrency taxation. So if you are out there and you are preparing your own tax return or you're a tax preparer for other people, absolutely imperative that you listen to this and completely understand this episode. If you have a tax preparer who does your return for you, might not be as important for you to totally grasp what we're talking about here, but I think it's always important that every taxpayer have an understanding of what's going on in their tax return, which is why I put this content out there. All right, guys? So stick with me. As always, if there's anything that I glaze over or I go over too fast, let me know in the comments and I can come back and do more episodes on those items that you guys need a little more help on. All right? Cool? Let's go. All right, so when you open a traditional investment account, I want to back up and start there, okay? The account type is chosen when your account is open. Okay, so I'm talking about Morgan Stanley, Fidelity. You know, when you go and you invest your money with a broker, they decide when you invest what type of accounting they're using. And if you as the investor don't specify that, then it just automatically is assigned to FIFO or FIFO. I say FIFO, but it's first in, first out. And we will talk all about these in a minute, all right? So traditional investments, it's handled. You either pick it at the beginning or it's assigned to you, all right? Well, in crypto, that's not the case, all right? There is no assigning. It doesn't happen when you first invest. They don't make you choose what method you're going to use. And so at this point in time, because they haven't set that limit, you guys, there's so much, there's just so much room for tax planning with this, all right? But before I can get you excited about why there's so many options for tax planning, we got to build the fundamentals, right? So let's talk about the different options that are available, okay? So when we talk, I said at the beginning, when you invest in a traditional type of investment, they typically assign you FIFO, meaning first in, first out. That means the earliest coin that you acquired is used for your cost basis when your first sale is made. Okay, first in, first out. The coin you bought first is the coin you sell first. Okay? So the next option is last in, first out. This means the most recent coin you purchased is the one you sell first. Those are the two: first in, first out, last in, first out, FIFO, LIFO, FIFO, LIFO. I don't know. I say FIFO, LIFO. I don't know what I say because I don't say it very often. So those are the two typical accounting methods, okay? Then there's also some tax specific options out there, and this is where it gets fun, all right? So there is a tax specific method called lowest cost out. And what that means is the coin with the lowest cost basis is sold first. Okay, I'm going to say that again. Lowest cost out means the lot or the coin with the lowest cost basis is the first out. Okay, lowest cost basis. And I'll explain in a minute why these two tax specific ones, in what situations they're going to be beneficial to you, okay? So then on the opposite end is the highest cost out. So this is the lot, or this is where the coin with the highest cost basis is sold first. All right? So this is all going to come with what kind of year we're having. All right? So if you sold in a year where costs were really, really high, okay? They were up here, okay? And you sold, okay? We would want to do the highest cost out so that we're selling the most expensive ones to minimize your gain. All right, does that make sense? Then on the other side, lowest cost out. So you sold at a low point. Why? I don't know. So we may or may not want to, this is not going to be the same case for every taxpayer because you guys all have different goals and other income that you are going to want to counteract. but let's say this is your only income, all right? So so you sold at a low, okay? Lowest cost out, you're gonna minimize your losses, and the reason you might wanna do that is so you can save your other losses for future income, okay? You don't have to understand everything I just said. That's why you have a tax accountant or a CPA to do these things for you, okay? But what I think is important for you to know is that there are 4 different options out there, which means there are 4 options for us to help you minimize your gains, or maybe, or maximize your losses, and counteract some other income you have. There's so many things, so many options out there, okay, guys? So there's a misconception out there that so many CPAs, even CPAs feel or believe that investors are required to use FIFO, which was the first in, first out that we first talked about, you guys. Not true. The IRS has not stated anything requiring which accounting basis that we are required to use, all right? So that right there is why you need an accountant, okay? You may have up to this point watched previous episodes and been like, I can do that, I can do that, I can do that, I can do that. That's fine, okay? You can't do this, all right? And maybe you can, but I don't think so. And whether it's me or it's another crypto tax expert, okay, you're gonna bring your info to us and we're gonna be able to help you use your crypto losses or gains or your crypto investments to minimize your taxes, all right? And that's going to look different for every person. So if you have a lot of income coming from somewhere else, then we'll want to use your sales from this year to maximize your losses, right? So we can counteract some of that income. On the flip side, you might have losses from your other investments, and long-term losses are limited unless you have gains to counteract them. So it might be a year where you come to us and we want to show some gains this year and get rid of some of those cheaper coins because you have these losses coming from another area, all right? So not things I expect you to know. That's why you hire help. That's why you hire professionals to help you with these areas, all right? So just a few things, like my whole premise is just so you guys know that if you're involved in crypto and you have taxable transactions, if your CPA tells you, oh, that's easy, we just use FIFO, oh, there's only one accounting method, it's not true. And if you go to, make sure you're using an accountant who knows the different accounting bases out there, accounting methods out there, so they can help you maximize your tax benefit from your crypto. All right, guys? In case you didn't catch it, we at Lippa Beers & Associates do offer crypto tax preparation and tax accounting. And what's cool is we also offer free consultations. So if you just want to come chat with us for 15 minutes and see if we actually are a good fit and can do what you need us to do, let us know. And then we also, our website, we have our tax packaging pricing all there ready for you guys. We're transparent. So check us out. And as always, thank you for joining me this week. This is a longer episode, but again, we're getting into what I think is fun stuff, so I get excited. And make sure you leave in the comments, or leave me comments, questions, and suggestions for what you guys need to hear on this channel. What is it about taxation of crypto that you guys need to hear? What do you guys struggle with? Let me know. All right. And as always, I ask you to subscribe.